This is the Hey Ed YouTube channel, and I am your host, moderator, and all-around nice guy. I am not a financial advisor. Don't construe anything I mention in any of my videos as investment advice. Always do your own research before doing anything with your money. This is episode number 15 in my series called Trading Tricks, and boy, is this going to be a good one. I'm really getting down to brass tacks now for you guys. Your patience is paying off. In this video, I'm going to show you exactly what my personal favorite trading strategy is. Now, remember, I told you that as you go along, you're going to develop your own trading skin. You're going to find the things that you like to trade, and that's what I strongly recommend. I recommend that you settle in on just a few things that you look for when you're trading, something that you can repeat day in and day out. When you do that, that's when you become a trader. Now, the strategy I'm going to talk to you about is, just like everything else, is applicable in every time frame. Whether you're a day trader or a swing trader or a position trader, or even for your IRA or 401k long-term stuff. Remember, you always want to think like a trader, not an investor. The difference between the trader and investor is not one of time frame, it's one of philosophy. I want you to learn to think like a trader. Even if you're not day trading, you don't have to day trade in order to be considered a trader. All right, so let's get right to this. Now, I'm going to show you an idea here, and I have to give credit to my oldest son, Vincent. Vincent actually owns a pizzeria in Brooklyn, New York. So any of you who happen to live in New York, particularly in Brooklyn, the name of his pizzeria is called Randazzo's Pizza, with 2 Z's on Ditmas Boulevard. And yes, he delivers. I think you'd really kick out if you happen to walk into his place. Tell him that you watch his old man on YouTube. That'd be fun. Okay, but anyway, Vincent gave me a text a few days ago saying, "Hey, Dad, are you watching BBBY?" And so I looked at it. Oh, very good. I'm so proud of him for seeing this. Good for him. And he did this trade. He actually did the options on it, which is even more aggressive, right? But let me show you what he found, and let me show you the lessons that you can take from this. Okay, so let's start by looking at a long-term chart of this. Now, this is I believe, a 6-month chart on BBBY, which is Bed Bath and Beyond. And you can see here that this is a nice, clean chart. What I mean by that is it's not all over the place, right? It's a very clean setup. All right, so you can see that for a long period of time here, I didn't draw the second line, but you got a channel going down there to the downside, right? And then it started to go sideways. This is the first sign that this stock was starting to find a bottom, is trying to find a bottom. And it went sideways there, a little bit of tug of war, but could not really get anything going. And then it broke the bottom part of the channel, but then held and just kind of did another little channel, right? And it broke the downside a little bit. But a few key things here, right? It's not like when they broke the channels, it plummeted. It just kind of went down to the next level and went sideways. And then put in this nice long channel before it broke. Okay, let's take a little closer look. All right, so here's a picture of that nice long channel, right? It's nice, long, and tight, just like we like it, right? We like nice, long, tight channels. And see, it's pretty well defined. Now, the first trigger, we're going to broke out of the channel right there. This is where I would be buying. I'd buy this guy all day long. Okay, this is nice and clean. Now, remember, we talked about channels before. The longer the channel and the narrower the channel, the more explosive the move when the stock or crypto, by the way, you can superimpose this. This could apply to any product. It doesn't matter. What matters is the chart. Okay, so the longer the channel and the narrower the channel, the more explosive the move when it finally breaks the channel. Now, what I do in this situation is I buy in the break, and then I use the bottom part of my channel as my first stop. Okay, then you saw it goes up, goes down, puts in a V. Then when it makes a fresh new high right here, I should have put an arrow there. When it makes a fresh new high right there, I raise my stop from this guy to this guy. Now, originally, now when I first put on the trade, I did not have very much at risk, right? Because the stop was very nearby. But then when I got a chance to raise my stop the first time, then not only did I not have anything at risk, but I got a small profit, locked in actually. And then it ran away. And look what this guy did. Now, this is what I call the walking stops strategy. Okay, so let's say that you put on a trade for whatever reason. Now, in this case, this stock had made a fresh new high. I always use the nearest support level to identify my stop. So actually, the first stop would have been down here because that would have been the nearest V behind me, right? But anyway, you set a stop, and then as the stock goes up, goes down, and puts in a fresh V and makes fresh new high, I raise the stop again. So the idea behind the walking stop strategy is that as soon as you get into a trade, the very first thing you should always be doing is setting your stop, okay? Because that's going to protect you on the downside. So you set your stop, and then as the stock goes up, you keep walking your stops up. Now, as soon as you get a chance to raise your stop at least once, you at the very least reduced your risk. But what you probably will have done is eliminate your risk, maybe even lock in a small profit. Then every time after that, as you reset your stop, you're locking in a profit. Now, as soon as you set your stop to the point where you have nothing more at risk, or you got a small profit guaranteed, that's a really good feeling to have. That's where you know, okay, no matter what happens, I'm going to make money on this trade, or at the very least, I'm not going to lose anything, right? That's a really powerful feeling. Now, when you first put on a trade and stock starts to run, you never know which trades are going to turn into the monster trades, right? But this strategy will allow you to stay with the trade if it wants to keep going, right? So you only need a few really big home runs to make your day, make your month, make your year, right? You only need a handful of monster trades to really change your life. But the only way to get the big move on a stock that wants to run is by allowing itself to, which means but you have to do it the right way. You don't want to just guess. You don't want to have just operate on faith. You want to have a strategy in place that will allow you to get it. And this will do it. This is the only strategy that I know of that will allow you to get the whole run of a move if it wants to give it to you, right? You just walk your stops up. Now, usually what happens is somewhere along the way, you are going to get stopped out, usually with some kind of a profit. But once in a while, you're not going to get stopped out. And the stock or the crypto or whatever you're in is going to keep going and going and going. Remember, this strategy works whether you're day trading or whether you're position trading. You just look at different time frames to set your stops, right? The whole idea is to trade with a strategy, trade with a plan that you like. This is my personal favorite way to trade. Let's talk about stops for a second. Now, the idea of setting the stop is to limit your downside risk, right? Now, there are two types of stops. One stop is just a mental stop, where you just mentally say, all right, I'm going to use that for my stop. If it gets below it, I will manually go in and exit the trade. The other way is an actual physical stop. And any trading platform worth its salt these days will allow you to input into the computer where you want your stop. All right, the stop is at 20 and a quarter. All right, so you set your stop at 20 and a quarter. Then you can walk away. All right, because the computer is there to protect you from yourself. Then every once in a while, you go in and monitor it. And if you're not stopped out, maybe you adjust it a little bit. And there are two ways to determine how to set a stop. One way is just a numerical number. You say, all right, I'm willing to risk 50 cents on the trade. So it's an arbitrary number that you pull out of the air for risk management purposes. The other way is to use a technical stop. You use a stop based on technicals. Now, if you're going long, if you're buying it, that means you want to use the nearest support level, or V, right? V, or the bottom part of a channel, serves the same purpose. That's your technical stop. But if you're short, remember, shorting is the way of making money on a stock when it goes down, or crypto. So what you do is you reverse it. So you would set your stop at the nearest resistance level, and so forth. So in this strategy, stops are critical. It's an essential part of your trading strategy. All right. So that's my personal favorite part of trading. Now, I don't limit myself to walking stops. I'll do other strategies along the way. But again, in these snippet videos, I'm just giving you little ideas here and there in small bite-sized pieces. But the idea of using walking stops is one of the most powerful things that I can teach people because it's simple, it's easy to understand, and people get it. People understand the logic of it. And this is where your trading plan is everything, right? You come up with a plan, whether it's the walking stop strategy that I just showed you, or it's something else. Always have a plan. You never want to wing it. Now, I do want to give one caveat on this strategy. Now, there are basically two reasons to get out of a trade using the walking stop strategy. The first one is you get stopped out, all right, as per planned. The other way is what? Now, this is another edism in my course, and that is called the problem, okay? And this is a good problem to have, actually. And that is to say, what if your trade starts to run away from you? It becomes hot and it just takes off, all right? So now your stop is real far away. All right, you said, holy cow, this is going crazy. All right, so what do you do in that regard? Do you stick to your original stop and be willing to give away that big run it just had? Or do you want to maybe take a little bit off the table or go for a little bit? So, I mean, again, it's a good problem to have. Now in that situation, I would certainly take something off the table, lighten up. There's a cliche in the trading industry, buy the dips and sell the rips. Okay, so if you get a rip, something where it's just running away from you, okay, you got to start deciding what you want to do. And again, it's a good problem to have. And if you're using the walking stop strategy, I promise you, you're going to have trades like that from time to time, where it just goes it just gets way out of hand and it just runs. And you have to start deciding how much money you want to make on the guy. And, rule of thumb is you don't want to be a pig. You don't want to be the last guy, out. On the other hand, if I want to, run another 30%, it'd be nice to capture that too. So maybe what you do is you reset your stop arbitrarily. maybe the stock is just screaming up and your stop is way down there. So you say, you know what? I'm going to raise my stop halfway up the line here just because I want to. So the two basic reasons to set a stop is one, an arbitrary number that locks in a profit, and the other one is a technical stop. That would be a hard stop, right? But this is my favorite strategy. It's very simple, and I hope you find it useful. I hope it makes sense to you. So that's it for this video. Please make sure you subscribe and please give a comment if you like this stuff. The likes and the comments really help the algorithm a lot. I've got some more videos coming, so stay tuned. For now, Edward Anderson signing out.
Copy that.